Ladies and gentlemen, it is time for the end of the week wrap up with group chat. We're starting off today with an interview. Who do we got?
Yeah. We got Dulma Altan. She is a former beauty entrepreneur turned content creator on TikTok, and she has a private community for women DTC founders. And she comes to talk about all things happening in the DTC space, a lot of conversations about the beauty space and kind of her perspective on it. Really good. And check her out on TikTok. She'll give you the handle. Great way to start off the episode.
Love it. And then we have, we have a lot to talk about. It's a fucking bloodbath out there.
Yep.
So, we're going to talk about it. We got some Tesla news. We got a very well-known investor is shorting. You heard that right. Shorting Apple stock. Really interesting.
Woo.
Got to talk about that. I think the reality of these, the market is starting to hit some of these massive businesses, and we're going to talk about that. And just a general overview. And then, of course, we end with our winners, losers, and our content recommendations for the weekend. Who's ready?
Let's get into it.
Let's go.
Let's do it.
Cash.
Ladies and gentlemen, group chat.
Cash.
It's $1 trillion. Hot.
All right, everyone. Before we get into some news, we have a special guest who's, similar to us, popping on TikTok and is an expert in something we talk about all day, every day, which is direct-to-consumer e-commerce stuff, all things happening in the space. And really, I went through a bunch of your videos last night. It's very informative for any up and coming or even veteran founder of just the changes in the industry, the things that are happening. It feels like some of the more kind of the way that I kind of interpreted was there's all these newsletters out there that are kind of sharing similar types of information, but just doesn't have personality or opinions. They just kind of share the information. And yeah. I think you're coming at it from a really interesting perspective. So welcome to the show.
Thank you so much. Thank you for having me.
Yeah. And, this is a topic that we talk about a lot, and we're really kind of, and I feel like you share a very similar sentiment. We feel on the show here that direct-to-consumer is in for some tough times.
Yeah.
Obviously, we've been in the industry just in apparel for 20 years. We've been in direct-to-consumer for 10 and never seen headwinds like this before.
Yeah.
And it's a combination of a lot of stuff you discussed, which is the iOS 14 update that obviously made inefficiency in advertising on another planet. You have major supply chain issues, rising shipping cost, record high return rates. And then now we have inflation, which is causing a consumer softening. What, in your experience and what you've seen, is that it? Or is there something else that's not obvious to the average person?
Well, I think there's also just competition, right? In the pandemic, so many people started businesses. There are so many celebrity brands that are crowding the market. In some ways, despite these headwinds in the past few ways, the barriers to entry for starting some sort of an e-commerce D2C brand have lowered. And so we're starting to see kind of that still catching up. That's going to be a lagging indicator. So I think on top of all the things you just named, there's just more competition in general.
And so do you I saw you had posted on a video that you felt that a lot of beauty brands were going to close this year and in the coming years. That's a bold statement.
Yeah,
because when I think of direct-to-consumer businesses, beauty feels like such an ideal business because very high gross margins, cheaper to ship, no size issues. I'm guessing return rates are lower than apparel. I could be wrong, but maybe I'm not too sure. What is happening where you clearly see the line of sight on that?
Yeah, and I don't necessarily think it's going to be more closures than other verticals, but I do think beauty is not insulated from that because there are a lot of brands that are trying to compete. They're trying to find their footing. There are older, more established legacy brands that are trying to stay kind of competitive with the newer ones. And it's just going to be really hard, especially for any brands that have raised a lot of capital and are operating super unprofitably to be able to compete in this climate. And I think we're starting to see that in tech for sure, right? With these major sort of shutdowns of companies that have raised a ton of capital. But I think that's trickling over into beauty. And the crazy thing about beauty is sometimes it just really blindsides you what companies are closing down. And the brand might be beloved by customers, but it doesn't mean that they're safe.
Interesting. And do you think that like when you speak to brands, I speak to a lot of brands, not as much as probably you do in the beauty space. What is like their sentiment? Like, are they just like, fuck it, I don't know what to do, maybe we should shut down? Or are they like, how do they get out of this hole, in your opinion? You have your own brand. Tell us about your own brand and how are you thinking through it?
Yeah, well, okay. I used to have a fragrance brand, a clean fragrance brand that I operated for a couple of years. And then I started a community, which became an education business for women in D2C. So I've had some evolutions in my career and I do talk to a lot of brands. And what I'm seeing is I think everybody's just scrambling to figure it out. I don't think anybody after pouring, their heart and soul into a brand kind of just thinks like, fuck it. I think everybody's just sort of scrambling for a lifeline, but it looks different. Some of them are taking the right approach of diversifying and trying to kind of become, find a path to profitability or just sort of become a little bit more resilient in these times. And others, I think, are not really adapting quickly enough. And we're going to see that. And then I think that is true for smaller brands, startup brands, but I also think it's true for really established legacy brands that are owned by some of these major conglomerates.
So I have a view on D2C, basically that obviously now that D2C has fallen out of favor with venture capital, I think it's virtually impossible to raise a round if you're a D2C brand.
Yeah.
And I think the biggest mistake entrepreneurs make in this space is if you have a good product and you have customers that are loyal, you can get to 1 to 5 million in revenue and be profitable.
Yeah.
But the problem is if you're an entrepreneur, you didn't start a business to just do 1 to 5 million in revenue. You have ambitions of, doing hundreds of millions, regardless of the space. And with especially how customer acquisition costs have gone, I just don't think it's the right move unless you just have some virality that can, propel you. But it's really hard to get beyond 5 million in revenue.
Yeah, I would agree with that. And here's what I would say about the funding piece. I completely agree that sort of like the tech-focused venture model is not a good fit for D2C. And we're seeing that now. But I do think, incoming cat, I do think that where I see success is when brands are really disciplined about how much they raise, how often they raise, about sort of operating profitably or close to profitably. And when they do raise, they're raising not from tech investors, not from the Forerunners or the Thrive Capitals of the world or the Lightspeed Venture Partners of the world, but instead from beauty industry sort of like veterans who understand how to come in basically as your silent partner and help introduce you to the Sephoras and the Ultas of the world and the right, suppliers, et cetera. I think that model still can work, and it's actually probably the best of both worlds.
And so to that point, how does, like, you have 1,700 people in your community. How are these women financing their business today, right? Like, how are they finding partners and investors? Because 5 years ago, to raise money for a direct-to-consumer startup was feasible, right? Like, you still had to have a relationship. Like, you came from Red Antler and Google. Like, Red Antler created half this market, right? Mm-hmm. So, like, you clearly, if you wanted to go raise venture money, you could have done so. How does someone who's, maybe they're doing $500,000, $1 million a year, like, how do you think they even find those people?
And just for the audience members that haven't heard of Red Antler basically did all the branding for the start of D2C brands and then charged a lot of money and took equity in a lot of them too.
Yeah. I'm sure they did well.
Yeah.
I mean, who knows? With these major flame outs, who knows how that equity actually fared? But
yeah.
But yeah, I what I see is our community is made up of people who kind of just, I feel like with entrepreneurs in general, you kind of do whatever you need to fund your business, whether it's you're bootstrapping and you're just using sales from customers, or you're, using debt, or you're relying on friends and family to get it off the ground. I see a mix of that. I do see that increasingly the ones who are able to raise even a small amount of venture funding tend to be fairly well connected in the industry. Maybe they come from the industry. Maybe they've worked at a L'Oreal or something for several years, et cetera. So I think it kind of just depends on somebody's network and their background. Not to suggest that it's impossible to raise venture capital if you aren't well connected, but it's pretty damn hard.
Since you deal with a lot of early stage D2C e-commerce entrepreneurs, have they mentally realized, like, if you're saying you raise capital from like beauty experts, someone who executive at Sephora, they're not going to give you like $1 million on 15 valuation. They're probably going to say, we'll give you $1 million, but it's a $2 or $3 million valuation, like the old days, how businesses were created. Like how are entrepreneurs adjusting to that? Because the headlines can get like confuse you of what your valuation should be.
Yeah, I think if people come from the world of tech and they're setting out to raise a venture round for a D2C business, but they're sort of, for example, valuation expectations are still in the world of tech, I think they will need to calibrate. And I think they generally are savvy enough that they do understand that, for example, like the multiples on your revenue are not going to be the same for consumer brands as for a SaaS startup, for example. But I think in general, I don't necessarily see that crossover that often where somebody's coming from tech and they're used to insane tech sort of like valuations and they're trying to raise for a beauty brand. It's more that they kind of take what they can get, because raising for consumer brands is different than raising for like a Web3 crypto whatever buzzword startup.
Web3 crypto NFT DeFi.
Yeah. With
That's
AI.
how you raise money.
Yeah.
Exactly.
What would you launch a direct to consumer brand today?
Maybe I would, if there were a way to sort of test and validate things with a little bit of capital until things are settled enough that the venture market is a little bit more willing to open up their wallets again. Because I feel like right now, a lot of investors are just kind of holding off, right? They're kind of, deploying at a slower rate, et cetera. So maybe if I were to test and validate and then potentially raise, but I would, because here's a hot take. I actually think in environments like this, it's a lot harder to survive, to get off the ground and get some traction and really thrive as a business. But actually you develop so much more discipline that is built into the DNA of your company that can serve you well for the long term, which is why I think we hear a lot about how a lot of major tech companies and startups actually were born during crises, right? Recessions. And I think that just builds a certain amount of discipline that we don't have anymore.
Yeah, no, absolutely. And we've lived through some recessions, and definitely, as painful as they were, we came out a lot stronger on the other side. But like, we run into a lot of folks that have aspirations of launching businesses, and specifically, the go-to is something direct to consumer because it's attainable, right? Mm-hmm. And my view is that like the biggest challenge with direct to consumer that are unfortunate kind of problems that are going to be very difficult to solve is like, how do you efficiently acquire a customer? And in the case of 99.9% of the population, they don't have a built-in audience, right? Like a creator or someone famous does. So then you're left with the same tools in the toolkit as everybody else. And that was great 5-6 years ago when Facebook CPMs were cheaper. But today, it's, like you said, it's very competitive and it's very hard to acquire a customer. The other piece, which I think is like has to become like an industry thing, is that like I don't think enough founders think about free shipping and the cost of that, and then really what that true cost of shipping is when you think about pick, pack, returns, exchanges, obviously increased rates of shipping. That to me is like, I think Zara announced yesterday they're going to charge for returns and exchanges now, which is a big deal in my opinion, because Amazon kind of screwed us all with the free returns and exchanges, and then we all kind of followed suit. Like, that's my challenge of like, I don't know if I would start one until like you need another Facebook to come to fruition. Like, do your founders, how are they diversifying their ad spend today? Like, in what's the chatter in the community?
Yeah, that is the $1 million question. I think people are trying to diversify away from paid. People are using TikTok a lot. They're kind of scrambling to try to figure out TikTok. But even what I am starting to see on TikTok, whether it's for individual creators or for brands trying to kind of stand out there, there are so many more people joining TikTok and trying to leverage that as like a brand awareness platform, that it's just a little bit harder to go viral. I mean, if you started posting on TikTok during the pandemic in 2020, like ideally March, April of 2020, you had probably the easiest time. I mean, everybody was on there. The supply and demand was skewed in your favor. These days, I actually think that's not so true. That being said, I still think if you're strategic and consistent about a TikTok strategy, that can work. Or if you're willing to be patient and build some sort of content or community well ahead of launch, if you're building a community around a certain theme or topic, or if you're kind of plugging into an existing community, or you're kind of doing a content to commerce sort of play, it just takes more time now. But it's either that or partner with some sort of influencer, or, you know how to work the PR machine, but you have to have some sort of unfair advantage. Or you have to be willing to figure out these different platforms like TikTok.
Yeah, I think that's absolutely right. Like, unfair advantage is totally the right word. And I think, unfortunately, like, it's hard to break it to people when they don't, you have to be like very objective on what that unfair advantage is. Like, someone would be like, my cousin is Rob Kardashian's best friend. I was like, well, that ain't gonna fucking work. and I think it's like, it's almost like, outlining to people, these are clear unfair advantages. And, if you don't have this in your arsenal, like you're in for like a rude awakening. Do any of these folks talk about building a true omni-channel strategy? But I know the buzzword in beauty is like, let's go to Sephora and Ulta. But that shit's hard to get on the radar of Sephora and Ulta. I mean, you're talking about two of the best retailers in the world, not like your neighborhood skate shop. Like, when I launched my brand, the neighborhood skate shop picked up my brand because I walked in there with a backpack and I said, hey, I got some t-shirts. I grew up around here. All right, fuck it. Here's a $300 order. Let's give it a shot. That's not happening at Ulta.
And here's the other thing is, once you do get on the shelves of Sephora or Ulta, it's still not a guarantee. You could still not be able to move product. You're responsible for the storytelling. You're responsible for getting people into the store and buying your product, because if you don't, the terms can be onerous. And so I think people think, oh, once I get into Sephora, once I get into Ulta, which is already hard, then they think they're set. But it really doesn't work like that. You really have to build up to that.
Yeah, I agree. I think that's a big part of the challenge, is that like omni-channel is the right approach. It's just that everyone wants the ideal. Like, I just want to get into Sephora and Ulta and we're set. And I just try to explain to people, like, there are a lot of brands in those stores, but like 5 companies own most of them. Yeah, and there's like a small slot for the rest of us to figure it out how you get in.
Are there examples of TikTok native creators, so kind of the 10 people, or maybe it's fewer, that have over 20 million followers? Have they launched any brands? I don't follow the creators and successfully. I've tried to follow the creators to see what the hot dance is, but I'm not really looking at their taste and brand. So I'm curious, who's had success?
Yeah. Well, for example, Addison Rae has a beauty brand called Item Beauty, and it's at Sephora. I hear mixed reviews. And then Charli D'Amelio has a cosmetics brand partnering with Morphe Cosmetics, which is sort of like a big cosmetics brand that sells in Ulta. So they do have that, but it's one of those things where probably Gen Z sort of fans of these figures will buy initial product, but are people coming back? Is there retention? Are there repeat purchases? Therefore, what's the LTV? Does it actually make sense? Is it actually differentiated? That I don't know, but they do have their own brands.
Interesting. Why did you decide to post on TikTok?
I do these things called 100-day challenges where I'll pick a platform and post at least once a day for 100 days in a row. I started with YouTube 2 years ago, to the point where I actually ended up randomly with a kidney infection, ended up in the emergency room, and I still refused to stop posting. So I kept posting.
Oh my God.
So that was probably maniacal, but I did that. And then, and then I did that with TikTok. So I thought, okay, I'm going to just get to know this platform because it's becoming the new thing. And then by week 3, I stopped doing stupid trends because I wasn't very good at them. And I decided to post about business, specifically the Kardashians' businesses. And it got over 2 million views and it was off to the races. So now I'm an accidental creator.
Wow. And so what's kind of your business model today? Like, how do you think about the world?
Ooh, those are 2 different questions. My business model, or what I do, is now I create content. I have brand deals going. I get a lot of inbound for brand consulting and advising, and I am also, running my community. And we're about to launch more courses, which I paused for a while I was creating a shit ton of content. So that's kind of the ecosystem of things I'm involved in.
How do you join your community?
People actually find it often because they see my TikTok and they end up finding it. But the website is makelane.com. And then you can join the community, which we're going to migrate probably to Slack. And so, yeah.
And it's only for women?
It's only for women, although I think we might change that moving forward and have it be like focused on women, but not necessarily specific to women, because I feel like the whole, girl boss movement is kind of dead.
Is that true?
I think so. Yeah. I think okay. I call it Girl Boss 1.0. I think it's kind of dying. So.
And why is that? That's a really curious statement.
Yeah. A few things. So there was a time back in, 2015, 2016, 2017, where there were a lot of sort of female founded brands, female founders that were gracing the covers of magazines, The Wing, Glossier, Outdoor Voices, et cetera, right? Especially a lot of consumer facing brands that had raised a lot of venture capital. And that was this like very compelling thing. The book Girl Boss was published. They did a Netflix show. And it struck a chord because I think people liked seeing themselves represented in that. But because we shifted to a more expanded definition of inclusivity, it wasn't necessarily inclusive of everyone. It was inclusive of like rich white women, for example. And I think that became problematic. There were a flurry of sort of like takedowns of these figures. And I think now people are kind of wanting to see something that's not quite so narrow. And I think, just things being female focused isn't enough. So It's not enough to just add the word like, CEO or girl boss. That's not enough anymore.
I like that. I like that breakdown. That's good. That's interesting because I didn't think about it from that perspective, but it makes total sense. Mm-hmm. Awesome. And how do we find you on TikTok? What's your handle?
The handle is at I am Dulma, Dulma.
Awesome. Well, very informative. Do you have any bold predictions for D2C this year? Give us something. Give us a hot take that no one's thinking about.
Oh my gosh. I don't know if I can tell you something no one's thinking about, but...
How about someone that goes out of business that we're not thinking about? I know you got inside scoop.
I do, but I can't. When I talk to people, they will tell me things and then they'll be like, wait, this is off the record. And I'm like, I'm not a reporter. I'm not going to use this against you. But I think a lot of the celebrity brands are not going to last. And I think they're probably scrambling. And these days, being a celebrity isn't enough. You have to basically treat it like you are an average, normal layperson that happens to have a platform. But the product and the brand need to stand on their own. And that's not true of a lot of them. So I think we're going to see a lot of them sort of pivot away from trying to diversify by having some sort of a brand.
Boom. I like that.
That's awesome.
Well, thanks so much for your time.
Of course.
We'll definitely love to have you back on once you're back in LA, because I think there's a lot more we can dive into.
That sounds great. This is great. Thanks, guys.
Thank
Thank
you.
you.
Take care.
Hey guys,
Hey.
What's going on?
sorry I missed the interview, but I'm here for some news.
Okay, let's
If you'd
get
like
into
to
it.
talk about it, here's the news: we're fucked. All right, we'll see everyone on Sunday.
Yeah, we should do a quick market recap before we get into the first.
It's down.
red.
What's the recap?
No. I
Down
have
and to the right.
I think I have a.
You have a hot take?
Yeah, I have a clear view. It's not a take, really.
What's the view? It's down.
Do you see
You
the way
go
out?
up, you go down.
No. It's
Does
clear
your view
view.
include going up ever?
So what's happened in the last, call it 3 to 5 days, is Walmart reported, got crushed. Target reported, was down 25%,
Which is ridiculous.
That's a staggering number. That's like absolutely insane. A company that big, that kind of traditional consumer retail
Yeah.
that's been
Biggest
around
drop since
for
1987.
yeah, it's been around
And
forever.
the numbers weren't that bad.
No,
Just
So I
low
think-
profitability.
I think what's going on is growth tech that's already down 80%. At this point, my view, if you're growth tech, the only way you get whacked another 50, 60% is if you just have really bad news or bad earnings. And from here on out, if you can provide a pathway to profitability and positive free cash flow, you'll get rewarded. Because if you look at the last 3 days when the market was just getting whacked, the broader market, it was the traditional companies, the Targets, the Walmarts, even Amazon. And it's the first time the market's finally realizing that, hey, people have less money today than they did 4 months ago, so they're spending less. Like, it's the most basic concept. So now they're realizing traditional businesses are getting hurt. Because if you look at growth tech, they're all held up, like in the last 3 days.
Oh yeah, in the last recent bloodbath.
Yeah,
I
the
feel like-
last recent bloodbath. So
Yeah.
I think now traditional companies are getting their medicine, and they're going to get
Doesn't it
whacked.
feel kind of
You
like
just
the
have to
first
whack
time
everyone.
Yeah, everyone's got to get
everyone's
whacked.
getting whacked? My fear in all this whacking is like that last inflation data wasn't great. Like it could be up a couple tenths of a point next time.
Yeah.
Like and I've heard like there's no sign of gas going down. We're now
Yep.
talking about food shortages, baby formula, credit bubble. Like that's my worry is what if another really bad piece of information comes out like, oh, inflation's up 0.2 of a point, credit bubble, gas. Like, don't you feel like
Let me just ask you this.
Let me ask you this
worse.
because it's fun. Let me just for the fun of it. We're not going to clip it and play it again in 3 months. Anand, what do you think the chances are that this is, sort of the bottom of the whacking?
For which companies?
For the
Oh,
index.
let's say for growth.
For the
Let's say for-
index.
I think the S&P, the broader market, non-growth tech, I think still has room to go down.
Okay, what about
Whack
growth tech?
it.
Non-growth
Let's get
tech still has room to go down. Growth tech, if you're going down from here, you're going out of business.
Yeah, you go to zero.
And then yeah, I don't even know. Because I mean, it's such a hypothetical.
Well,
How much, like, do you see a lot of potential whacking in traditional? Or do you feel
Traditional
kind of like
whacking?
we're out of just some good old fashioned traditional whacking? Do you
So
think that?
the technical indicators, which, you can take it for what it's worth. The technical indicators is if we cross S&P 3800, we're at 3900, it's a free fall.
Free fall.
That's what the technical indicators
It said, I think I was watching today, a technical analyst thought at that point it's like 3,200,
Yes.
3,000, which is really bad.
Yeah, that's really bad. And that, we got to hold 3,800. Hold the line.
Hold the line. Last time we haven't held the line on anything.
You know what they held the line on though is what's his name? Melvin shut his doors.
Yeah, you're going to see a
Melvin
lot of hedge
Capital.
funds. Here's the math on the hedge funds, which is why Melvin shut down. And you're going to see this story over and over again, especially if you were in any tech stocks. You're down like 50% because you weren't just buying Google and Microsoft. No hedge fund manager gets paid to own Google and Microsoft. Anyone can do that. It's like, how do you create alpha? And you're down 50 to 60%. And to hit your watermarks where you make money as a hedge fund manager, you probably have to 5 or 6x the entire portfolio from here. And while there are companies that are going to 5 or 6x from here, the entire portfolio isn't. So there's no pathway for the fund manager to make money. So you shut down.
Shut it down. I mean, he
Give
got
everyone
the
their
line
money back.
held. I mean, that was such a victory for meme world.
Yeah.
I mean, they got it. Even
put
though it was
the L in
like
Melvin.
late.
Like, I don't want to I'm not going to name names. It's some of the biggest funds you read about. I don't think the fund managers care because you hear stories. They bought the most expensive, every month they bought the most expensive house in Miami.
Yeah. Name them.
And they're down, 17, 16 billion. And just by that number, you should be able to figure out who those funds are. And I don't think they're going to give a shit.
Masa.
Name them. Yeah. Well, what about
think about it. They made billions.
Yeah.
There's no pathway for them to make the next set of billions. You give everyone their money back.
I like it. I think it's a great strategy.
Get
Giving
a house
up
in
is
Miami.
not.
Chill out.
Giving up is underrated.
Sit out a couple years, buy a house in Miami, try again later.
Yeah. Just come back.
Whatever.
This shit's over now.
Yeah, it's over now. Wait till the bowl comes back in a couple years and ride
Right now,
that wave.
You're getting mauled by a bear.
Getting mauled by a fucking slow ass bear.
That's the funny part. A lot of these guys have made so much money, and they get the luxury. We're like, it's not that fun anymore.
I'm gonna take a break.
Oh yeah, they do. I mean, I wish there was more to it than that, but that's about it. Speaking of this, Klarna. Let's talk about Klarna and Affirm. Like, this is. Am I right in thinking that we're looking at the first wave of these companies that officially? So, like, we know everyone's taken a loss, but now you're talking about people actually having to go raise money at a lower valuation. Like, that reality is setting in. So Klarna. Last July was valued at $46 billion. It's now raising at $30 billion, which is a 33% discount. Affirm is down 70% on the year.
They're publicly traded, right?
Yep.
Affirm.
Yep. So Klarna, I guess, is more what I'm talking about, which is that you actually raised at one round. That is now your valuation. And here comes today, you need more money and you have no choice but to raise at a significant decrease. It's just reality hitting.
I think two things.
It's not that bad.
Any sophisticated investor, this could be a headline number, meaning 30 billion, just to not get whacked. Because it's realistically 46 billion, it should probably be a $5 to $6 billion company, given the way publics have performed. And if you think about 5 to 6, that might even be rich because there's no pathway to IPO.
Yeah.
Because the IPO market for fintech is closed.
Yeah.
That door is closed. They got whacked.
Whacked. Everyone's getting whacked.
So could this be just a headline number so they don't get embarrassed? Because it should be in the single digit billions.
So this is actually kind of a win in your eyes.
But the way investors often do this is they let them say the $30 billion number, but it comes with so many bells and whistles that they make money no matter what. The details of this term sheet aren't released.
Yeah.
But typically it should be predatory.
Yeah. So the way to think about that is there will be a preference that if the company gets sold for some lower amount, that this money is obviously the first out and they may want 2x preference.
Yes. Maybe more.
Like, for example, if they put $5 billion at $30 billion and the company gets sold for 15, that investor gets $10 billion if it was a 2x liquidation preference. So that's where it gets ugly really, really quick. It could
Don't you start to sign yourself up for bad? I mean, doesn't it start to get kind of messy here? No matter what happens in the future, you're now tied to these obligations you made during this time.
It's the same analogy of the hedge fund manager. There might not be a pathway for the old investors to make their money back.
Yeah.
Yeah, it's just, okay. And then Affirm down 75%.
This is the first, like, really big decacorn that
Instacart.
Instacart was before the market crash.
Wow.
What they do? They raised the down round before the market.
No, they actually didn't raise. What they did is their 409A valuation, which you have to do annually, came down from 40 billion to 24 billion. So the auditors,
Pre-crash.
what's that?
Pre-crash.
Yeah. And so they didn't raise. So the 409A is basically a way to re-incentivize your employees at a lower, it's a valuation by auditors, but you want it lower in this environment because it's the only way to recruit talent.
Yeah.
Like no one is hiring or taking a job at a $40 billion, valuation, if that's what your stock's issue in private companies. So, they didn't raise. So it's very different. Klarna raised.
Yeah.
So this is the first one that came to take their whacking.
Yeah.
And who knows what the pref is on the capital. But you're going to see this story. If you're actually a private growth investor, this is like Christmas.
Yeah.
Because you have all these private companies that need capital.
Yeah.
You can't go public. There aren't acquirers for these businesses.
Too big.
They're way too big. And you can, there's going to be some really smart capital allocators that are going to make a fortune.
I think there'll be a lot of acquisitions too.
Maybe.
It'll be
Like
ugly,
a
but
clean
they'll get
house.
acquired.
Yeah,
Someone's
that's-
lining up for a cash. I mean,
There's a
someone's
lot
just-
of cash
Yeah.
on publicly traded big tech companies. There is so much cash sitting on their balance sheets. If you
But the
can
other
go
thing-
like a Klarna can get, Apple can go buy them for 20 billion.
Apple should offer them 3.
Yeah.
Apple should buy
Yeah.
all of them.
Apple could just own the whole internet. Really.
Speaking of Apple,
What's going on?
what's up with your boy Michael Burry shorting Apple?
I'm not too
That's
sure
the biggest
about
news
Michael
today. That
Burry
it came
here.
out that he's aggressively shorting Apple.
Yeah, this is the
I thought he
thing
was,
with
like,
Michael
Big in
Burry.
water.
Yeah, it's like kind of the dead clock. Like he fucking nailed the mortgage securities. Really haven't heard his name much since.
Just
And
was like stupid, obscure. Like now he's focused on water. Now
Yeah,
he's
water.
saying like it's always like it's almost like he's like just going for the next like what can get me another movie and like nothing's really hit.
yeah, if it weren't for the movie, no one would know there's trades going on.
No.
Zero.
And
Zero.
here's my view on short sellers. It's just a reflection of your outlook and your personality. Like if you make a living trying to find ways that companies can fail,
Yeah.
You're
especially
sad
Apple,
guy.
like, I mean, sure, you can make a good trade, but like, imagine waking up every morning and just like, I want to, what else who else
Yeah.
whose lives can be
Who else
ruined
sucks?
today?
Yeah.
Yeah.
Who else sucks that nobody knows yet? Does he have a like statement of like what his theory is?
He bought a bunch of put options. I haven't read his full statement on, and I'm actually looking for it right now.
It's
But
usually like a tweet and then he deletes it. That's his thing.
yeah, it's a big.
Big tweet and
but-
delete guy.
But the thing that I think was interesting is Warren Buffett is publicly out there saying he is buying Apple stock.
Yeah.
That war chest, every fund on earth owns Apple stock probably.
Yep.
It's a really tough stock to short because who the fuck is liquidating their Apple position?
Yeah, I think he made money in the first quarter. Like, bravo to you. You're going to lose in the long term if you keep this short on. He probably exited his position.
Yeah.
And the other thing, like, it's really, really hard to be a trader. It's not that hard to be a long-term investor. Because you only have a window when you're doing trades like this.
Yeah. But I mean, what else? I mean, other than the housing market, he hasn't had any like big notable wins, right? Wow, he saw that too.
I don't think so. I know a lot of buzz of what he was thinking and everyone wanted to know, but
Wonder how water's going for him.
yeah, I don't
I
know
still
his
got
water
it.
trade.
I still got plenty.
I drank
Still-
a lot of water this morning.
Still comes out of my faucet. And then what else? No, go ahead.
Yeah, but I think it's interesting. The people are doing an analysis on what they're seeing, what he's seeing that they may not be. Look, the general belief is that there's going to be a significant more left of pain to kind of happen in the market. So if that's what everyone's waiting for, then I guess, sure, Apple has to go down. I mean, if you really believe that, you should just short the S&P 500, specifically buy Apple, the one that has the absolute most cash. Kind of, there was a comparison about Apple in the 2000s, how much it went down in the recession in the 90s. I'm like, that's a completely different Apple than what it is today.
Yeah.
This Apple shits cash.
Shit's cash and is like on so many different, like they're not just selling
Businesses.
computers. Yeah, it's like so many different businesses. I just don't like, is he banking on some sort of like Foxconn chip fucking issue? I don't know.
Like some supply chain issue that causes
Yeah.
Apple to not, I mean, like Apple is like, it's like a consumer staple. To me, like you cannot live without your Apple iPhone, your Apple AirPod, your Apple laptop. Like these are bare essentials for life now.
Yeah, long term, it's a stupid trade. But what are the odds he just did this for marketing to get his name back in the press?
I feel like he does that. I have no
It's
idea
a
what
pretty
type of
big
guy
bet.
he is, but that's all you see of him. Literally, he is famous for being the guy from the movie who it just so happens was an incredible movie. And every now and then he pops up in the news for these kind of off the wall bets. But that's it.
Dude, he had 206,000 put options at the end of Q1. Damn, he made some money.
He definitely made money.
Well, yeah, he definitely. Yeah, he's not.
He didn't
I'm
just
not
do
saying
this.
you can't make money doing this. I said it's really risky and just a shitty way to live life.
Who's
also
gonna
that,
get fucked today?
I think the problem too is that like his bets might actually pay off. I'm sure he consistently makes money. It's the way that the media like makes him like sound like a prophet. Like, oh, he's shorting Apple. Apple, he knows something we don't.
Well, the media is looking for heroes and villains. That's it.
Yeah.
They're not looking for just, the guy from the movie shorting Apple. No, they want to make it feel like he found something that nobody else did.
That's fair.
And no one's going to talk about it if Apple's trading at $175 by the end of the year.
No.
Okay.
Well,
fair enough.
hopefully he closes trade
part
out.
2 of the movie. I like the movie. So whatever. If we get one
Okay.
about Apple falling off a cliff, I'll watch it. Anand, I'm curious how you treat this because you're a big runner.
Mm-hmm.
But one of my biggest priorities this year is to stay hydrated at all times, never fall off of that. I notice when I'm dehydrated, I'm tired, I'm just sort of lethargic, stuff like that. Do you have a technique or any magic bullet to accomplish that goal?
I have a rule that I have to drink 1,000 milliliters of water before like 10 a.m.
Are you kidding?
Yeah, like 2 of those,
How much
like
is
500. It's not much. It's like the 2 of the 500 ml, like smaller Fiji bottles.
Okay. Before what time?
Like 10 a.m. So I'm like, I know I got my 1,000 in, and hopefully like at lunch and what else, I'll like. But I also work out in the morning, so it's much easier. I don't know when you work out. So like I'm done with my workout by 10. So like I need to get that water in anyways, and then I just drink casually throughout the day.
Yeah, that's a good point. I'm a evening guy. I'm a 6 p.m. guy. So I have to force myself to drink water during the day because I'm not really, I didn't work out. I'm not that thirsty. And I have to chug a bunch at night.
It was much easier when we were coming into the office because what I would do as soon as I got here, I'd go to Lisa's, get 1,000 ml bottle, and then just down it, and then figure out what hope I get the rest. Yeah.
Well, that is the exact reason why I lean on liquid IV, because I've noticed that no matter how much I try, I've tried to have like this big jug of water sitting next to me. I've tried to say, okay, I need to drink 4 of these bottles, whatever, but there's just hardly any chance that I'm going to actually drink all of that. So liquid IV is the real sort of hack to getting the hydration that I need without having to chug massive amounts of water. Do you use liquid IV?
I do. And since we don't go to the office anymore, there's no structure. And since no one's working anymore, there's no way to figure it out. So liquid IV is the solution.
It's true. The best part is their flavors. They have now Concord grape, guava, watermelon, lemon, ginger, tangerine, and even more. And they just really nailed, like I've tried a lot of these type of things, but they always taste kind of like artificial, sweetenery, not good, whatever. They just nailed it on the flavors. So that part is always good. And then 1 stick of liquid IV in just 16 ounces of water hydrates faster and more efficiently than water alone. So don't worry about chugging massive bottles of water. Oh, I need to drink a gallon of water every day. You can lean on Liquid IV to help you. It's filled with vitamins B3, B5, B6, B12, vitamin C. And on top of that, just because they're good people, Liquid IV has donated over 19 million servings globally. So you can grab Liquid IV in bulk nationwide at Costco, or, we always love a discount. You can get 25% off when you go to liquidiv.com and use the promo code GROUPCHAT. Liquidiv.com, promo code GROUPCHAT. Get hydrated and get on with it. Let's get back to the episode. What's going on with this Tesla? So Tesla got kicked off of the S&P 500 ESG index, and then Elon went on. I've kind of been following it. Like he was talking on Twitter about how it's kind of like a woke thing. Like they're just kicking him off on some kind of woke stuff. They're claiming that they don't like the way that they handled some of the investigations into driverless accidents and stuff like that. But it's kind of this huge thing. But it does seem like Elon's got some support. I think it was Kathy Wood or somebody just tweeted that it's ridiculous. What's going on? Do you guys have any deeper insight on what's going on with Tesla?
Yeah. So I think the first thing to explain, S&P 500 has an ESG index. So that's environmental, social, and governance. And I think the challenge here is that if you are a big fund investor and you have to allocate some of your money to ESG companies, this index is an easy thing to buy. Tesla got kicked off the list. You know who is on that list? ExxonMobil. What in the flying fuck is ESG? They may be a socially conscious company because they offer, I don't know, maternity leave or whatever the fuck they do.
It's a joke.
It's a joke.
ESG.
Amazon. You know how many packages Amazon is wasted by shipping e-commerce packages? Like, I could go through the entire list and find holes in every single one of these companies. Tesla's actually net positive for humanity, and they're getting kicked off the list.
Yeah. So this is purely kind of wokeness or Elon hate.
It's Elon hate. And if this is happening, and really the only reason we know about it is because Elon's so famous and you can communicate via social media to the world about these kind of stupid things that
that's true.
Officials are doing. What happened like the last 30 years that we don't know? Like no one caught it.
I mean, what's happening today that people just can't be heard about it?
Yeah, I agree.
You know what I mean? Do you think that this matters for their stock, or do you think it's
no, it doesn't matter at all.
I think it does, because there are people who buy the index. Money gets pulled out of it.
I think Elon's immune to everything. Elon's immune to everything. I think another company, yes.
Like, I almost feel like them kicking him off was good for their stock now, because of now he's able to rally the people behind it.
And now those indexes, the actual fund managers that buy these ESG indexes are going to buy $1 of ESG to $1 of Tesla as well. They're not stupid.
Tesla is just, I mean, the Elon Musk hate is just fascinating. Even after the interview that they did on All In, I saw, with the population comment he had that like population decline is not good for humanity. And he explained why. And I saw someone tweet out, "Oh, Elon's telling women to get pregnant and have kids." And I was like, that's what you got out of that?
Oh my God.
I mean, what the fuck?
It's so ridiculous. They just hate him. I mean, people just hate him so much. He's
become you know what's funny? I mentioned how I liked him to someone recently, and they couldn't believe it.
He's like a Joe Rogan.
It's Joe Rogan, exactly.
I think it's age specific. I said this last time. I think under 30 he has like a 90% approval rating. Yeah. Over 35 he has a 90% disapproval rating. Yeah. Over 40.
Yeah, you might be right. You might be right because I think you're probably right. But he is getting like I don't want to say Trumpy because that's a little bit different, but definitely Joe Rogan-y, where like you can tell that people hate him so much that you're not even like it makes no sense. You're just like finding anything to hate. It like population stuff, and then you're talking about he's controlling what women do with their reproductive rights or something. It's wild. But I mean, whatever. The guy's so fucking big at this point that I just think there's so many people that do love him like so severely. And this type of stuff just helps. He's reached that sort of untouchable thing. I mean, coming out and saying you're voting Republican, he's not scared of anything. No. If you do that, you are directly, there's nothing more you could do other than maybe saying like, gosh, I miss Donald Trump, to directly fire up and embolden everybody who doesn't like you.
Yeah.
And he doesn't give a shit. He just spit in the face of the.
I want to drop a t-shirt tomorrow. Elon versus the world.
You should.
Well, you got a printer in there.
Yeah. Might as well use it. It's just drying ink right now.
Print them up.
All right, Javier. Elon versus the world. We're launching that tomorrow.
He's got great facial expressions. Like he did at Met Gala.
Oh,
remember?
Elon?
He was like standing.
He's a goofy guy.
And then the interview, he made some as well.
Yeah.
He's just reaching a stride. I can't wait. Like, how does this end? The thing that's crazy to me is every week it gets crazier. Like you feel like Elon, like remember when we used to talk about like how does Elon manage all of this? And it was like nothing compared to what he's doing today.
It's nothing.
And like it just, you keep thinking like, all right, well, damn, this is crazy. Like this is definitely the max for like any human being. And then like there's more piled on next week.
Yeah, because in a normal world, if you're acquiring a $40 to $50 billion company and you're making a bid, it probably takes up 20 hours of your day and you're sleeping 4 hours eating like ramen, trying to like sustain. Yeah. This guy's like, it's 9 a.m. Let me check in on the Twitter buy.
I want to
know doing interviews on All In for an hour and a half or something. That was a long interview.
I know, just like in the middle of the day. Like,
What did you say? You wonder what he eats?
Yeah, did you just get like an IV with all the nutrients? Like he's not sitting down for a meal.
And think about
but he looks kind of out of shape and like shitty, you know?
Yeah, he probably doesn't.
I'm just saying, I love him. You know, I love him. I've spent a lot of time.
He's just bloated from alcohol. I can relate with.
If he's drinking, if he's fucking drinking alcohol,
he's definitely doing shrooms and acid. He talks about all the time.
Drinking. He launched a tequila.
Does he have a tequila?
Tesla came out 2 years ago.
Yeah.
Tequila's the most crowded space, huh? Who doesn't have a tequila? Diaz tequila.
Everyone has a tequila.
It's the new t-shirt company.
Yeah. It's like you got to have a tequila brand.
Yeah.
Don't you think he's just going to keep pushing the envelope? Like
I know, but I think he flames out if he keeps
basically
going.
like bullied a publicly traded $40 billion company into accepting his bid when no one at the company nor the board wanted him to be the acquirer.
Here's a problem. This level of intensity is not sustainable, right? So obviously no one's going to tell Elon Musk you need to slow down, but that he probably does because you can't keep up this pace for another decade. I don't even know if you can keep it up for another year.
I don't know if you can keep it up for another 10 days.
Don't you remember, like, in 2019, was it Jason Calacanis or someone was saying they were worried for his health because he was sleeping on the factory floor, not like sleeping for months on end. So I guess now he's probably like, the Tesla factory's fine. Let me figure out new challenges. I don't know.
He's at least sleeping in a bed. He might have been doing this for decades. Like this might just be nothing new to him and he just handles the pressure really well. I don't know, but that's exactly it. You just would think that he has to get tired or sick of all the bullshit but he's literally in the middle of you're as busy as a person could be. And then you decide, I'm going to just for shits and giggles, post a tweet that I am voting Republican because let me just go kick the beehive and add that to everything I'm doing. Like, you didn't have to do that.
Is that a saying?
That's a thing, yeah.
I like it.
I wish I had made that up, but I didn't. He's just poured. Imagine being that busy, and then you're like, well, you know what I could use? a little more attacks. And then the guy's posting like, if I mysteriously die, like, it's been nice knowing you or whatever. Like, and then he posts like a popcorn emoji.
If you believe the simulation, that he believes this simulation, he's only going to keep pushing because none of this is real to him.
Yeah. I think we talked about it. I think whether we're in a simulation or not, I guess I'll leave that up to Elon. But if you live like you are, then that's what you get. And I really feel like that's what he does.
I don't know. Yeah. I have to say,
it's made us tired talking about it.
Yeah.
He actually has to do the work.
I know. I can't imagine. There's been like articles and stuff. We should look into it, but like about like his guy, he has a guy. Remember we talked about it on, and like, does he have a team or does like, there's a guy that's like,
I think it's Jason Calacanis.
Well, no, they named him. I'm sure Jason Calacanis is one of,
Oh no, his investment advisor. It's the guy, he worked at Tesla and now he manages
Tesla.
It's Tesla, yeah.
Yeah, and I forgot his name. I read a really interesting article about him.
Yeah, he's like the fixer. He's the guy. Yeah, he's the fixer.
He's the fixer.
He's the Wags if you watch Billions.
Yeah.
Okay.
Yeah. So anyway, okay. How about this headline? For many Americans, economic opportunity seems increasingly out of reach. So that's an article that we're going to talk about. To me, I guess kind of no shit. I mean, we're talking so much about inflation and all these things. I don't know. I want to hear your guys' take on it. I'm also curious. It's funny that like 6 months ago, it was like everyone's rich, and then like here we are saying economic opportunity is just increasingly kind of going away. It's just, I don't know. It's crazy how fast it flips. But what are we talking about here? What are they saying?
Yeah, so
things are looking bleak. Everyone's getting whacked.
McKinsey did a whole survey, 25,000 people. And the general kind of consensus is that Americans are just pessimistic about economic opportunity. And obviously that's, obvious.
I wonder why.
But yeah. And they're saying that like there's two economies. There's the one that everyone's reading about, which is 3.6 unemployment rate in April, which is insanely low. You have retail sales up in March and, have a lot of good data, but then really it's the inflation that's hurting the overall economy and the average person. But here's the most interesting thing. They broke down by category where people are cutting. So here were the interesting ones. Entertainment, including restaurants. And this is in the last few months, this group of people they pulled. They said it's down 32%. Clothing down 25%. Debt payment or savings down 20%. Education down 10%. Mental health services down 10%. And these are all categories that were up significantly. Yeah. The lowest was just housing, negative 9%, because I think you're just locked in, right? You can't really change. Groceries are down 16%. So we should see that. I think we're already seeing that in the data in the Walmart and Target kind of earnings. We'll probably continue to see that. I think you'll see that more in, like, I think you're making an exception for Disneyland, but you'll cut the Friday night family dinner.
I was at Disneyland yesterday. No one was cutting Disneyland.
No one cuts Disneyland.
Yeah.
Nobody cuts Disneyland.
A lot of years.
And everything's
Plus, you've
expensive.
been planning it for 2 years. You've been like sitting at home. You're not cutting Disney.
Yeah.
Yeah, I think the years are $25.
Yeah. $25 for some fake years.
Yep. But doesn't this kind of feel to you like, I don't know. I think that when everything was all good and everyone's like, oh, I'm rich, I'm quitting my job, I'm an NFT trader, I'm this and that. Like there was always this kind of group that was saying, or this feeling that I think we even shared some, that was like, you guys just don't know. Like it's been however long, 12 years, however long it was, of like nonstop growth. And nobody has even experienced like tough times in that regard at all. And now, yeah, they're hitting, and yes, it is bad, but it's not, it comes back around.
That sentiment, I'm curious if you broke it down by age, how
maybe the same as Elon.
What was that
90%
stat?
think the world's ending, and then the older ones don't mind.
No, because
so much.
I think what the one positive thing the pandemic did do, the problem is the way people traded it was it opened up people to finance and learning on podcasts and reading on Reddit. And there's like so much valuable stuff in all those things.
Now they
and
just
Throw it
know-
all out the window.
Now they
It
know how to
doesn't
watch
mean
their
shit
money
now.
go away.
And it showed people a pathway to participate without being an insider in Wall Street.
Yep.
Unfortunately, all the assets they bought are down 90%
So they're back to
or
square
100%.
one. You're
Yeah, the
better
problem is you
off of never
participate in
listening
the-
to that podcast. You're better off not listening to the
You're better off never
podcast. You shouldn't have
downloading
read that
Robinhood.
book.
No.
You shouldn't have watched that
You should
YouTube
have stayed
video.
dumb.
Yeah,
Stay
if
stupid
you
is
had,
would have been
if you had stayed dumb, you'd be chilling right now.
chilling.
Yeah, you probably have savings because you probably wouldn't have gone on Robinhood and
You know what I
lost
think
all your
about all
money.
is when we started Young and Reckless, it was essentially like in a recession or at the tail end, right?
Yeah.
And I think back to that time, and I think about how this stuff affects my business today and whatever. I didn't even know. You could have been like, hey, Drama, I know you want to start this clothing company. You know we're in a recession right now. I would have been like, what the fuck is a recession?
You were
I
balling back then. You were driving a Benz. You're 22.
But I had no idea. I was dumb. I had no fucking clue. And so there's like, oh, we started Young and Reckless in a recession, and then the economy grew, we grew, but like literally it did not add 1 ounce of stress to my life because I just didn't fucking know. And so that's my best advice.
I know. You know Steve Jobs' famous quote, "Stay hungry, stay foolish." Is that what
Yeah.
he said?
Yep.
Mine's is "Stay dumb, stay stupid."
Yeah. Stay happy. Stay dumb.
Yeah.
Stay happy.
Stay dumb, stay happy.
Stay dumb,
Yeah.
stay happy.
Think of
I
all
was
the people
actually-
that would have not even known to check Robinhood that fucking rushed to it over the last 2 years and are just watching it
You know how
melt away.
depressing it is to see you and Anand knows your fucking net worth just disappear. You know better. You just see it down 10%, down 5%,
Down 10% every day.
every day.
Like to just wake up and look at your phone and it's just red is just. I know we
the
all
person,
do it.
the 2009 drama popped out into his Benz and just got it started.
Give 'em a
I
plug.
wanna
Let's
add-
start a clothing line. Anyone trying to make some money? Hey, do you guys know how to make T-shirts?
I have a couple close friends who are wildly exposed to the public markets because of various IPOs and whatnot. And I'm going to add one to the stay dumb and stay poor. Because if you never had anything to lose, it wouldn't
That's
matter
true.
when it
Yeah.
all keeps losing.
That's true.
I'm going to start a whole TikTok page on why you should stay poor.
Yeah, I think you should. And I think it'll probably find a massive audience.
Put down that book, turn off that podcast,
Yeah. You should
and
just burn
don't try
one
to
book
get
every
that
day.
raise.
Today's book
Don't-
we're burning is Think and Grow Rich by Napoleon Hill.
No, but I
you know
mean-
how all those influencers like blew up over the last 2 years that were like investment gurus on TikTok? You could be the new version.
Are those people still around? Is investment
Can't
TikToks? Can't be, right?
It's
can't
quiet.
be. It can't be.
It's quiet. It's quiet.
Oh my
But
God.
no, I think the first time I've watched the stock market daily the way I do now, and it's
Yeah.
probably like counterproductive, the more I realized it makes no sense on the way up and on the way down.
Yep.
So, I mean, it's easy for people to say the advice is always like, just don't look at it. If you're invested in good stuff, it'll go up over long term, but it's pretty hard.
Who doesn't look at it? Who's this asshole that never looks at anything? I hate those people who
Warren
say
Buffett.
that. Oh, you're a long-term guy.
Warren
Fuck
Buffett.
off.
This guy just looks at the initial rundown of the company, eats fucking cheeseburgers and drinks Coke, and talks
Is he-
to an auditorium full of people once a year.
Yeah, my friend Vivek
Richest guy.
yesterday was like, he knew we were going to Disneyland. And then I talked to him after. We only did like a half day. And he was like, dude, I was so happy you were at Disneyland. You didn't have time to look at the stock market. I was like, what the fuck you think I was doing at Disneyland?
Yeah.
Just refreshing my phone.
Yeah, but you know what? You know what, Matt? That extra churro, that ain't happening this
Nothing.
year.
I can't afford it. I could have afforded it 10 minutes ago. Oh, man. Yeah. Well, I guess you just got to try to channel a little bit of the Warren Buffett approach. I don't know. But I think we're all sharing. I think you should start the Stay Dumb, Stay Poor TikTok, and
Okay.
it'll probably be the most successful thing we do
Because
this
think
year.
about it, if you stay dumb and stay poor, you have no aspirations to get rich. So you're already removed so much of the stress and anxiety of life.
Yeah.
Take out the books. You don't even got to know anyone else is getting rich. You don't even got to know there might be a way to get rich. Just stay dumb. Okay. Welcome to group chat. You know how many people have written us like, I quit my job because of you and started my business. And now we're like, stay dumb, burn the book. Look at where we've gotten to. Okay. Let's wrap it up for the week with our winners, losers, and content. D, who is your winner for the week?
My
Anyone?
winner of the week is Martin Shkreli and
he's out.
Billy McFarlane.
The scammers. It's a good week for the scammers.
They're both got released. Early release for both of them, I think.
Good for them.
Yeah.
They're free.
So who has a
See what you do
SPAC
in this
first
market.
between the two of them?
Yeah.
Who SPACs first?
You know they are home just scheming. They're like, okay, what can
Yeah.
we do in this market?
And they sat out a downturn. This is perfect time. to go
Shkreli's
in.
coming fully liquid, just buying albums and companies.
Yeah. Did Billy McFarlane, did he go to jail for the Fire Festival thing, or there was something
Yeah.
else? Wow.
Yeah, I mean, he stole people's money, right?
I guess I didn't realize that. I guess I didn't realize he actually served time for that.
Doesn't feel like he got a lot. I feel like we were just talking about Firefest.
Yeah.
Seems like that documentary
On this
just came
podcast.
out. Yeah. Okay, well, I'm sure he has a new credit card concept or something he's going to be launching. Anand, who's your winner?
Growth stocks, baby, we're back.
What? Where?
Counter to everything I was just saying. No, I'm joking. No, not joking completely, but
Just kidding.
I do think the good growth stocks have bottomed or
Okay.
are not going to get whacked even more.
Okay.
And I'm going to steal this quote. Michael Mente told me he was at the All In Summit this past week, and I kept asking him because they had some really great speakers. And one of the quotes he told me that, was said at the conference was, this is a stock picker's environment in growth.
Mm-hmm.
So if you can find the good growth companies, because these companies are down 80%, whether it's SaaS or whatever, you're going to get rewarded. Like these companies, the good ones, are going to 5 and 6x from here.
Okay.
Are you investing in DoorDash?
I would love to.
But
You think people still going to be delivering food at like $75 to get a hamburger?
I think DoorDash is a fantastic company. I'm not even being facetious.
so are you going to? Why do you say you would love to?
Gotta wait for the market to come back up to make more risky bets. Dude. Relax over there.
You just said it was a winner because everything's going up. Stock picker's environment over here.
Stock
Pick one.
picker's
Yeah.
environment. No, and the other comment about how people aren't cutting Disneyland. I haven't been to Disneyland in 21 years, which I realized yesterday. I didn't know you have to reserve out. So the day before, I just went on, Disneyland.com thinking I could buy tickets. It's booked out through like July.
Yeah.
Seriously?
Yeah.
In this market?
Well, you have to also reserve your food if you want to get food.
That's a bad experience.
Through the app.
Yeah.
Or you can line up.
Like
Yeah,
you can make
well,
like a res at one of the little places.
Yeah.
So, I mean, we got bailed out, but man, Disneyland's no one's cutting Disneyland.
no, Disney, the
No.
mouse is untouchable.
The mouse is untouchable. You're right. Okay. My winner is the All In Festival. That seemed like really great. I mean, they had Elon. That was a huge interview. I know Raisa and Michael went. I didn't talk to them about it yet, but it just seemed like it seemed really well done. It seemed like they did a great job. They had parties. They had a whole thing. And I just, as fellow podcasters, great example of how to take your podcast audience and make it a real life event. I mean, yeah, we were first, no big deal.
Yeah.
But
they
you
got
gotta give
Elon.
props to the little guy. So we haven't, Elon's been busy. But yeah, it just seemed cool. I watched the Elon interview. It was really good.
I think we got gypped because they were supposed to release each interview
Yeah.
as a pod. So there's supposed to be, I think, 10 that
That's what I
come
thought.
out.
Yeah.
So they did the Elon one. And then the next morning, the first presentation or interview was Palmer Luckey, who, and this is all speculation because they haven't released the pod since Monday.
Yeah.
And there's been all the events done.
Yeah.
Palmer Luckey from Oculus. He's the founder of Oculus. Apparently, he's doing his interview with whoever was on stage, and he went off script and says, this is all on Twitter, recap from someone who was there. Jason Calacanis ruined my life. He ruined my life. He's part of the mob. And if you think I'm just some thin-skinned billionaire, well, I kind of am, but he ruined my life. He got me fired from Facebook. So the backstory is Palmer Luckey is MAGA and was publicly MAGA during the Trump election. Mm-hmm. And I don't remember what happened, but I guess Jason Calacanis was like kind of outing him on Twitter. Yeah. Like, oh, he's this alt-right guy, like Facebook, what are you doing? And then Facebook ultimately fired him.
Riley was there. He said it all happened.
Yeah, and I was asking Mente, I was like, what happened? He goes, dude, we missed it. Yeah. We just got there like when it was
Riley
over.
said it was nuts.
And then Jason came on stage and it was like this whole like back and forth. And then apparently Chamath had to like calm it all down. And then they hugged it out at the end. But my suspicion is we don't get another pod because there was a near fight on stage.
What the fuck? Well, why don't you just cancel your Palmer Luckey and give us the other 9?
Yeah.
They said the whole thing was going to be up.
Yeah, because Mente was sending me like slides from presentations. It was all good shit.
Yeah. I have to believe they're going to do it. Maybe something happened, or maybe they were because of traveling. I don't know. I understand why they would cut that episode, but why would you cut everything because of Paul Palmer?
Yeah, I don't know. They got the Elon interview up day
That
of.
was up ASAP. Yeah. That thing got a lot of press. Okay, losers. D, who's your loser for the last week?
Stocks still. Stocks, crypto. And actually, I don't know if it's my loser. It's just really annoying. But FTX, the crypto trading platform, is launching stock trading.
Yeah, and he took it, the founder. Sam. I don't know if he did it personally.
I think he did it personally.
I think he did it personally. Took a 10% and a 9% stake in Robinhood.
Personally.
It's
weird.
It's weird.
Don't care for it.
Well, stay dumb.
Yep.
Yeah, we're
sounds
loyal
like smart
to Coinbase.
guy stuff. No thanks. Anand, who's your loser?
George Bush.
Oh boy.
So he was. He was speaking somewhere yesterday. It went viral, and talked about like ruthless dictators taking over, like property or countries that isn't theirs, and the Freudian. How do you say it, Drama? You're the
Freudian.
You're
Freudian, but it wasn't even. I mean, yeah. Go ahead.
Freudian slip, and he's like said Iraq instead of Ukraine, and then kind of scoffed and said, "I mean Ukraine." And obviously, George Bush took us into an unjust war, and it's so bad because thousands and thousands of Americans have died in that war. Yeah. Trillions and trillions of dollars have been spent on that war. Millions of people on the other side have died. And we displaced an entire country on false data. And he passed a candy to Michelle Obama and everyone forgot.
It's a good piece of candy.
That is so true. That is so true. It's that easy.
All he did was pass a candy.
Like, you want Michelle a Jolly Obama. Rancher? It's all over. He said, this is what's crazy and why I said it wasn't even a Freudian slip, is because he said, blah, 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 ruthless and brutal invasion of Iraq. And he said, I mean, Ukraine. And then he, under his breath, said, well, Iraq too.
Oh, he did.
He did?
Yeah.
I didn't see that.
You have to watch it. He says, oh, I mean, Ukraine. And then he literally goes, Iraq too. Like he openly joked about it. Like it's so fucking crazy.
It's
we live in
up,
such a
dude.
crazy time, man. Like the trust in that stuff is just at an all-time low.
Yep.
Because it's so fucked up, and for every reason that you're talking about. But the other reason why it's fucked up is because all you're doing is reaffirming people's distrust today.
Yep.
They're just like, see, finally, some proof that these motherfuckers. So what are we doing in Ukraine right now? Why do we keep sending $40 billion chunks over there? Like, it just makes everyone like, it's just a joke.
Yeah,
you have to watch it.
Yeah, I will. I'll watch it again. I got I guess the clip I've been watching doesn't get I missed a half second.
Oh, it's nuts. Okay, my loser's Twitter. Did you guys talk about that Project Veritas thing?
No.
Where Project Veritas interviewed like secretly recorded a lunch meeting with a exec from Twitter, and the guy was like talking about Elon and mocking him for having Asperger's and literally saying he's special and that's why we can't take him serious because he's literally special and he has Asperger's and he wants to have free speech and we need to censor to tell people what's right for them, and it was fucking crazy. You also have to watch it. It's just literally, it's just mind blowing. And when we were talking earlier about the people that hate Elon and will just find anything wrong with him, I mean, the guy, like him or not, he's obviously brilliant. And like this random Twitter dude is like calling him essentially special needs and trying to like mock him.
Which, I mean, is so out of pocket on so many levels, but he's accomplished a lot if he's so special and like needs help.
Yeah. That guy that we talked about must be really good. The fixer. So anyway, they're my loser. Twitter. I just think if Elon ends up buying Twitter, great. He's going to get a lower price. If he doesn't, I feel like he just decimated Twitter.
Yeah.
If this deal doesn't go through, their general just perception is horrendous.
And to that dumbass who made that comment, like, it's kind of well known in Silicon Valley, the best founders are like Asperger's, autistic, like all of them.
You just shit on every
like the greatest innovators of our lifetime.
Yeah. And it's like this sassy dude, like just, he's literally special. He's special. And then the guy in the thing says like, they have sent us a memo, and he shows the guy the memo and says, do not talk to any journalists. Do not talk to anyone asking questions. There are groups like Project Veritas trying to catch you. He shows it to the guy who is wearing a body cam to send to Project Veritas. Like he's just such an idiot. Okay, content. What do we got for the weekend? D?
Just listen to the All In podcast with Elon Musk. I think it's amazing. I think everyone should listen to it.
I agree. Okay. Anand?
The Kendrick Lamar album came out last week.
What's your favorite song?
I think N95.
I like that Rich Spirit song.
And, I think it's, if it hasn't already, I haven't like read the news on it, but like, I'm sure it's critically acclaimed. I'm sure it's going to win all the awards. The visuals on like the YouTube videos they released are insane. And
here's my question: does Kendrick go sign like a $200 million deal now? Like
why don't we get Anthony on the pod? Now let's ask him.
We should, because The Weeknd just signed that Universal deal that was like hundreds of millions. Drake signed at Universal 400, 500 million was the rumor. And that was Kendrick's last album on TDE. So I have to believe he's looking down a 9-figure payday.
Yeah, I think PG Lang is going to be this like brand and creation that is going to end up becoming like a household name if it's not already.
I agree. Okay.
And congrats to Anthony.
Yeah, congrats to Anthony. Holy cow. If you want some content, if we're going down the path of dumb and poor or happy, and you want to take a break in between burning your books, I'm still watching content from this Johnny Depp trial. It's just good. It's just, I can't believe, like, I don't think since OJ has the country been so locked into, I mean, it is the biggest thing on TikTok. And there's just like, everyone now is a TikTok lawyer. They all know what's going on. They're all giving you their breakdowns. It's just wild. And it's some really good, completely pointless entertainment.
What's the overlap of Robinhood TikToker to trial lawyer TikToker?
I think they've transitioned.
Yeah.
I think 80% have transitioned. And yeah, they're now lawyers. Okay, that's all we got. We got some shout outs.
I think we got one shout out. We got one from Fug LJ. Just a big shout out to Y&R. Big ass sale, cool fucking clothes. That's the shout out.
Okay, well, Fug and thank you, dude. Fug, yeah,
That's it.
Okay, well, there we go. Okay, everyone have a great weekend. If you can, don't look at the stock market.
Go to Disneyland.
Go to Disneyland, grab your favorite book, light it on fire. That's our advice. We'll see you later.